All right. Well, welcome back to the iWealth podcast. Today we're joined by Mr. Brad Connors, and we're talking about business owners, and in particular the tax piece, because that is the biggest check that I write out every single year. Mm-hmm. So what can I do as a business owner to kind of help shelter, get that, so I get to keep some of the money? What's the strategy?
It's the number one thing, Matt, when we deal with business owners. It's not, hey, my investments could be doing a little bit better. It's like, how do I save on taxes?
Yeah.
The tax code is so complex, and we're not CPAs or tax advisors ourselves. We work very closely with their CPAs, but there are some tax strategies that we help with day in and day out for individuals or for business owners in order to kind of work with things from a tax standpoint. So, one of the things that happens is if you're a sole proprietor, if you're by yourself, or maybe you and your wife are in a business, you can do this thing called an individual 401k. It's been around for a while. You can even do a Roth side of it. That doesn't help you with tax savings today, but you can even do a Roth. But you can put, $26,000 each. You can throw $50,000 into a tax-deferred account, get some deductions from the business into an individual 401k. There's things out there called the SEP IRA. That's just the business putting money aside. It's like a profit-sharing plan for sole proprietors. Then there's simple IRAs. In simple IRAs, you can put up to $15,000, depending on your age, in that neighborhood, that you can put aside, and you can offer a 3% match for your employees that are working for you. And then there's traditional 401k. So there's all these different avenues that are set up for savings. And oh, by the way, in Congress right now, there's another bill out there, the Secure Act 2.0, that's going to create some other opportunities for business owners when it comes to saving money. Bottom line is they want to help employers get more money into the pockets of employees so that they can retire and not just recall on or rely on Social Security.
The government,
Yeah. So there's a lot of different plans, but you really have to sit down with someone and take a look at how many employees you have, how much free cash flow you have to put into these investments in order to make the deduction work. One strategy that we've had with business owners, for instance, let's say a farmer. So farmers let's say they had a very good year, they get to the end of the year, and now they take a look at, should they buy their seed for next year, their fertilizer for next year, and those are all deductions. So they sell their corn, sell their beans, and now they have this windfall. Now they buy their input costs, and their taxable income is going down. Well, they can use these same tools. They can use an individual 401k or a SEP IRA and put money inside. So let's say they use a SEP IRA and they put $30,000 in the SEP this year. So their taxable income's $200,000 after they buy their fertilizer. They put $30,000 into a SEP IRA, and now their taxable income is $170,000. It's like they bought a $30,000 tractor, but it's in an investment. And hopefully that investment grows instead of depreciates like the tractor will. And now they don't have to sell a bucket of dirt to retire someday. Now they've got this SEP IRA that they can. But what also happens is we also have the ability to convert that to a Roth IRA someday if needed. So let's say that now the same farmer puts $30,000 in, does it for 2 years, and in year 3 and 4 we have drought and it's a really bad year. Now we take that $60,000 that we set aside and we choose how much we convert to a Roth, and now we bring it back in as income this year. So now let's say their income was at $200,000. Remember, we wrote off $30,000 to $170,000. Years 3 and 4, let's say their income's $50,000. Because it was a bad year. Now we take that $60,000 and we say we're going to take it as income, put it in a Roth IRA. Now we pay tax on $110,000, not their $50,000, but now that $60,000 goes tax-free forever. So there's some different tools for business owners, and they just need to know how to work these different tools. And too many of them get so busy working on the business that they just never do anything to have a conversation, to have a strategy put in place around taxes. And they really need to have that strategy.
And that's really what your sweet spot is, and kind of what the offering for the clients or the folks that iWealth gets to work with, right? Come sit down and let's do the deep dive on your situation, because it's so specific to each business owner. The farmer has a different ability to do, a certain set of things than the guy that owns the media, business like I do.
So, it just needs to be customized, but it shouldn't be ignored. They should be having pre-tax meetings, and they should be meeting with their financial advisors, working together to put the plan together and then executing on that strategy. And the strategy isn't, okay, we got it, we're good. The strategy is every year taking a look at it and adjusting as it goes.
In an ideal world, are people looking at this like once a year, twice a year? Like with your ideal clients that are out there, are they doing 4 like quarterly meetings with you, or it's just an hour to say, okay, are we doing the right things with the laws that have changed or whatever? Is that happening 4 times a year?
No, I would say 1 to 2.
1 to 2
but they
times
also
a
need to
year?
have 1 to 2 with their CPA. And the CPA and ourselves need to work together on a strategy for them. It shouldn't be just, hey, whatever the CPA says, or hey, whatever the advisor says. They should be working together. But if they have a meeting with me and a meeting with their CPA and maybe a follow-up meeting, we should be good on that strategy. But a lot of times people don't, the markets are good, they're up 10%, we're good. We don't need to meet. Or taxes are fine. Well, they're not fine. You need to meet and see what strategies are out there. And you shouldn't be looking at today. You should be looking at today and 10 years from now on what your best strategies are. Because I've also seen tax preparers that are only worried about today and saying, hey, you owe $4,000, but now you're going to do this and you're going to owe $3,000. But they're still in a low tax bracket, and they should be paying on all 4 and doing a Roth IRA.
Yeah.
But they're just worried about today. So it just needs to be a strategy that's worked on together.
Very cool. Well, if somebody wants more information, how do they reach out, or how do they find you?
Just go to iWealthforme.com, and we're there to take care of them.
There you go. We'll see you back here next time.